Okay, here we are at 23-2 Work Together, where we will be doing a distribution of net income statement and also an owner's equity statement. So it's a two-step problem here. We have our information below. We've got the net income for the month, ended in April. We have Sophie Pavlov and Noah Manchi's capital as of April 1st. And then we also have the drawing balance at the end of April for both of those two. So it does say that Carpet World is their business and it's owned by Sophie Pavlov and Noah Manchi. The general ledger and income statement information is given in our question assets, and we want to prepare a distribution of net income statement for Carpet World. The net income or loss is going to be shared equally. So I'm just going to make this smaller and stick it over here off to the side. So remember that they do this for you, but you do want to make sure that you know the heading because you'll likely have to do that on the test. Remember, it's the name of the company, distribution of net income statement, and it is done for the month ended April 30th of the current year. So Sophie Pavlov has 50% of the net income, remember, because it's shared equally, and so does Noah. So however you want to do this, I like to sometimes work backwards on a distribution just because it makes more sense to me. So the net income for the month total was 32,600. And so half of that, obviously, we just divide that by 2. And so each of our partners is going to receive $16,300 from the month of April. So pretty simple on that one, not too shabby. We'll head over and look at step 2. So here again is all of our general ledger information, and then we also have our distribution of net income that we just completed. We'll need both of those in order to complete our owner's equity statement. So when we do this, again, I'm going to make this smaller so I can stick it over here. It says we're going to use the balances of the general ledger and drawing accounts to prepare an owner's equity statement for Carpet World, and no additional investments were made by our partners. So we start with Sophie. Remember again, we list each partner and we start with their capital balance as of April 1st. So her capital balance as of April 1st was $19,000. She did not have any additional investments as it says here. So her share of the net income, remember, was $16,300. And then we have to subtract out her withdrawals for April, which were $1,000. So her net increase in capital is 16,300 minus 1,000. So we have a net increase of 15,300. And so in order to find her capital at the end of April, we take 19,000 plus 15,300, and we end up with 34,300. Then we're going to come down here to Noah. So Noah's balance at the beginning of the month was 22,000. Oops. He also received the same amount of 16,300. Again, if you're not sure where I'm getting that, it's under the distribution of net income we did in step 1. Noah took out $1,200 over the course of April. So we take 16,300 and subtract out 1,200, and he has a net increase of 15,100. So then that capital balance for Noah is the 22,000 plus 15,100. So his capital balance is 37,100 at the end of April. So then to find our total owner's equity for the partnership, we simply add those two together because they are partners. The total for the business then is 71,400. So really overall, a pretty easy lesson, I would say, as long as you follow along and get those right. Probably will be a good idea to pay attention to the order of things here because you will likely have to do one of those on the test or possibly a workbook problem. So just want to pay special attention to that. So those are the two steps. You can head over and do your 23-2 on your own. Also pay attention that we do have two application problems for this section, so just pay attention and make sure that you complete both of those.